What's up, guys? JJ Fade 23. One sec. Let me just close my office door. How's everybody doing? I'm gonna make a quick recap and morning prep video of today on SLRX and PHIO. Guys, I use trade ideas for scans. As you can see, I use trade ideas. I have a gapper scan. All right, it's color coded, right? So I know instantly by looking at it what the red flags are for my thing, for my setups, right? The price, if it's below $1.50, it's a red flag. The gap, if it's below 45%, it's a red flag. Maybe 50% I've been using lately. The volume, the volume's always a red flag now because the volume's been crazy. But I don't really look too much into that because even crazy volume pre-market can have weak volume open and still dump. The float, if it's less than 3 million, it's a red flag. Institutional ownership, less than 40%. More than 40. Actually, more than 50% is a red flag. Same thing with insiders, and then 10% for short float. Market cap over 250 million or 300 million. One of those, it's a red flag. It's about the same thing. 250, 300 million doesn't really matter. And then, as you can see, biggest percent gainers list I have. In the morning, I usually go through the ones that are all up over 50%. So this morning, these two were the ones that were the biggest percent gains. I hated, I forget what the other one was. So I'm just I don't want to make this video too long anyway, so I can, make this video not too long. Anyway, so first things first, guys. I think gapping up, right? I see it on my scan. Now, guys, I use a thing called red flag criteria that I created many long time ago. It looks like this, right? Oopsie. I made this a long time ago. This is just what I like to do in the morning. So, you can't just keep everything in your head, right? So as I go through, price is at 450, market cap 6 million. I'm looking at trade ideas, getting the information off trade ideas. The gap's 180%. The gap stats are big for me. If the stock has an 86% chance to close below the open, that's great. PHIO, 100% chance to close below the open, right? I love those kind of gap stats. So once I have all these things, I say, okay, do I have any red flags? SLRX didn't have any red flags. I don't really love merger agreement for news, but other than that, no red flags. Now, as you can see, PHIO, the float is a red flag and cancer news is a red flag. So I already was like, okay, this thing might squeeze. Now, guys, after you get the basics of what you have here, right? What you might like, what you don't like. All right, we're looking at the dilution, see if there's any big dilution. I like to use dilution tracker. And then I also look at the filing sometimes. Right, so I'm not a huge filing guy, but I watched all of Ricky Analog's videos many times. But I'll go in here. All right, I'll see. All right, they have a high risk, high cash need. They don't have much money left. All right, they literally they might have to dilute soon because they need money. All right, they have warrants at here and there and whatever. So I'll go through that and see how bad this situation is, how high their cash need is. Add that to everything else I'm doing on my red flag criteria. Now, most important thing for me, guys, if I don't already kick the stock out by being like, if it has more than 3 red flags or if it has shitty gap stats, if the gap stats are below 75%, I kick it. I don't give a shit. If the stock closes below its open 50% of the time, I don't want to short it. 50% of the time, it doesn't close below its open. Why am I shorting it? So now I come to the conclusion, okay, SLRX looks like I could trade it. That's my number one trade I like because PHIO, I still will trade it even though it has 2 red flags and cancer news I don't like, but I'll have to let the chart tell me now. So basically I'm in the morning, I'm like, okay, SLRX, no red flags. So how am I going to trade this? Because I'm definitely going to trade it. Now, I go to the chart, you guys. What do I see? Obviously clear as day, this pivot right here, which everybody knows. Yeah, that would be great if we get up to there, but it's only at like 4 something in the morning. We have another multi-touch pivot right here. Look, touch, right? 450. Right? We also have $5 right here. $5 ultimate low pivot. I call that ultimate low when it's a down pivot. Now, guys, watch. Confluence, all right? So you have $5. Now you have 490 pivot right here, plus you have $5 psych level. Now, guys, if you put your fibs on from here down to the swing high, the most recent swing high, down to the most recent swing low. Now look what happens. Now we have the 61 fib plus $5 ultimate low pivot plus $5 psych level. Now we have multiple things here. So now I'm like, okay, if it goes past that, so this is my first level I'm watching, all right? Next level would be these pivots right here. This whole area, we have multi-touch pivots at 630, plus we have another pivot right here where it just gapped up and sold off, and we have the 78% fib. So anywhere in here, if I get a trigger at key, guys, so once I know my levels, right? So we have, I only care about $5, $6 to 630 area, and then 722. The only levels I care about. Now what happens? Now I'm waiting for the open, guys. I'm waiting for the open. Most of the time on every setup I trade, I'm waiting for the open. All right? Waiting for the open. And what I'm going to do at the open is either look for a lot of volume to come in and the stock can't really move, or it pops and stuff, or it spikes and gives me a trigger. Okay, so this is the pre-market high now. All right? So I'll tell you exactly how I traded this. All right? So, guys, this candle popped up. It's stuffed. I told everybody in the room, guys, I'm not going to go full size right off the open because I think this thing could spike a little bit, but I'm going to take a partial size right here. Now, I'm not going to add unless we spike and get a rejection or a really good trigger. So I took small size right here, and when we spiked up and did a fake breakout over the pre-market high, I add to full size with my stop right above here. The stock flushed way down here. I didn't take any profits. The stock went up. I kept my stop right here. It came down right here when it broke this. We started to develop a wedge. I told everybody in the room, guys, we need to break this wedge to the downside and stay below the lower trend line. Once we break this wedge to the downside, we need to stay below here or else this is going to squeeze. So even down here, guys, right here where I took some, I had an average of like $5. Even right here, I didn't take any profits because that's not how I trade, you guys. I'm looking for the 1 minute 200 and then end of day, or the 1 minute 200 and the 5 minute 200. I know that this is the best stats because I backtested 1,000 times, so I don't care that I'm up friggin' whatever I was up here. What? 20% right here, 24%. I don't give a shit. The stock was still up like 180%. So I don't care, or whatever, 150%, whatever it was. I'm not going to take profits before my targets. So what happened? I got stopped out. That's fine. I don't care. I mean, it's just another trade to me, right? Now, as you see, this was our other level up here, right? Guys, when the stock blows right through the level like that, you can't take that. The trigger is way over the level. So now, if you're staying at your desk, 720 was the other pivot. Now look, we have a high set right here, all right? Once we set this high, so look, this blows through this 6 to 620 level, no problem. Even though it rejects up here, comes down, it closes, it went so far over it, you have to be careful, you guys. You can't, if a stock blows so far over your level, now you short it when it goes back under your level, what are you going to use? This for your stop? You have a huge risk, just too much risk there. And it's like, it's showing that it's very strong. So, now, the next trigger would be either, the next entries after this would be either the stock starts to die and the volume decreases by at least 50% and then pops up and makes a lower high to short, or you get a trigger up at this 720 pivot. Here is your trigger right here, guys. It makes a high, comes down, goes back up, fake breakout. You get a perfect fake breakout over this high, right into the 720 pivot and dump. That's where you short, you put your stop rate above, and then you have a huge trade. If you use triggers at your key levels, it makes you're not just guessing if it's going to stop. You're not just scaling into a level hoping it stops. You're waiting for triggers, right? You had a fake breakout trigger here at the pre-market high, and you also had a fake breakout trigger here. All right? Now, if that didn't happen, or let's say you missed this fake breakout trigger. Now look at all this volume, super high, super high. Now look down here, look at the volume. Once the volume does this, it starts to be at least 50% less than the run-up volume over here, you would look for this. You would want this right here to bounce back up to lower high position, which would be this, which it didn't happen on this one. You'd want it to go up at least over the 61, into the 61, 78% fib area or higher for the short, risking off the high on a 50% volume reduction, and then hold for your targets. So that's what we did on that. And then PHIO, you guys. PHIO. We didn't trade off the open. Why didn't we trade it off the open? Guys, I told everybody in the room, look where it's opening. First of all, look how beat down this chart is. Second of all, what is this right here? This is a big tell. A big tell. This is another tell. Likes to squeeze. Good, guys, look at the chart and say, what does this thing like to do? Look. Look at this. Look at this. Tell, tell, tell. Every time it likes to spike, okay? Spike, spike, and then close, not even that low. Spike, and then close, not that low. Spike, close halfway down. Okay, but even more than that, look, guys, the stock's gapping up over the breakout level right here. Look at this. Look at all this accumulation or whatever you want to call it at the bottom, right? And look, it gaps up right over it. You can't short a stock at the open that's sitting right on top of a breakout level. You're just asking to get wicked off that breakout level and squeezed. So literally, once it fucking opened, I started watching it run. I said, okay, where's the pivots? Well, there's no pivots here, no pivots here. There's pivot here, but there's multi-touch pivot right here. Plus $10 psych level. So that was the level. I literally, at $5, said this thing's going to $10, I bet. So you had this pivot right here, which is one of the clearest pivots on the chart, 950. And then you had $10 multi-touch. So guys, again, watch. Again, look at you already have your levels here, right? Here's your levels. Guys, look at the fake breakout trigger. Here's the high that it's set, being a monster. You don't have to guess the top. Even right here, right? When it's screaming up into this level, you got a stuff candle that stayed below the level. It didn't go way over it, right? You got a stuff candle that stayed below, and then a second attempt that slammed back down. You can short that. You just have to understand on a stock that's this strong, it might want to try to retest the highs again. So if you short that, cover some into like the 10-minute EMAs or into whatever you use to cover, and then scale out and put your stop either above $10 because the next pivot up was $10, or you just take it all off if it starts to bounce and then wait to see what happens up here. And now what? You got a fake breakout and a stuff trigger. This is a stuff and a fake breakout at the same time, and it came super close to that $10 pivot, which was perfect. Right? And now, guys, it also did, if you missed the trigger at key level, either the fake breakout or the stuff trigger, what I just tell you, look, guys, look at the run-up volume. Almost 3 million shares. Now, look, way over here. What is the volume right here? 1.3 million. Okay, so now what do? You already got a double top. You got a trigger at key level. You're waiting for the stock to show that the top set, which it kind of looks like it. Now the volume's reduced by more than 50%. You put your fibs on. You wait for lower high position. Where's lower high position? In between the 61 to 78% fib or higher. At minimum, the 61%. It has to be above 61 fib or higher because you have to risk off this. You don't want, if it goes to 78 fib, even better. But you don't want to take it at the 50 fib because look, now you're risking what? You're taking it at the 50 fib, $8. You're risking $2 to get what? $2? That ain't worth it. But if it gets up into lower high position, right? Lower high. Stock's moving higher lows and lower highs. Look, right? Lower high, lower high, lower high, lower high. Now, if this high, that's a lower high, and it makes another lower high. So you wait for the volume to reduce. You start to get up into this area. I always have this drawn on my chart right here, like a circle or a rectangle in my zone. I want to take it when it gets up into here and risk off this high. So it gets up into here, take it risking off the high, and then it freaking sells off. End of day, best cover, as usual, on these pieces of shit. That was very easy to trade this without getting blown up. Why would you trade this right here? First of all, guys, look how close it is to the pre-market high right here. All right, when a stock opens this close to the pre-market high, it has a super high chance to break through. Once it breaks through, now you have to watch where the next levels above are. And now look at it just trending higher. Why are you trying to short this? It's just uptrending. Let it extend. Let it extend way up. And then it did extend massive. So as it extends, you guys, as it extends, you already know that most stocks don't extend even 25%. And then 50%, only like friggin' maybe like 30% of the stocks extend 50% or higher. 100%, you got like maybe 10% of small caps. So you know as it goes higher and higher into these levels, your edge of it feeling is getting better and better if you can get a good entry. And this is what happens. Gave you triggers right here in a short and an awesome fake breakout right here for a big, big, big trade. I wasn't at my desk for this, but I told everybody not to short it here and wait for a good trigger, and that's what they got. So, you know, first trade was like beautiful, and the second one was perfect. But and then guys, look, like I always tell everybody, when a stock's in a strong uptrend, watch. What do? You put your 10-minute EMAs on with the pre-market data off, and look, right back to the 10-minute 21. Because that's how stocks trade. The 10-minute EMAs with the pre-market data are off, in my opinion, are the greatest fucking EMAs on the planet for intraday trend trading or targets on sync stocks that are pushing. They just work so good. And if you look at a lot of, what's his name's? There's another trader that I know that uses this system a lot too. Shit. I think he uses like ribbons or bands or something. But it's pretty much bands of like 10-minute EMAs. I don't know if it's a 2134, but it's something close to those. I use the 2134 on the 50 and the 4 and the 8. When it stocks, and again, everybody knows this if you watch my videos, when it gets off the 4, it comes back to it. They all have something different, all right? Off the 4, it usually comes back to it. And then for a long, strong move up, flag off the 8, which is the brown line. And then for a medium, like a long on a decent, deeper pullback, it's the 10-minute 21. Or for a target on the short, the 10-minute 21. And then once we break the 10-minute 50, it's not bullish anymore. So that's how I use those. Anyways, I don't want to make this video too long, but yeah, that's pretty much how we traded it. So now looking forward for the rest of the week, I want to really see if these stocks are going to start squeezing high like these did today, or if this is just a one-day fluke. I want to see if they're going to be making moves all week now, squeezing, and like if the small cap world's going to start squeezing higher, or are they going to just go right back to just popping and dumping? Because we go through phases. Sometimes they squeeze a lot and then die. Other times they pop and dump in the first 1 minute candle for months at a time, which is my favorite, obviously. But at the end of the day, you guys, no matter what, whether they squeeze or whether they don't squeeze, whether they dump at the open or they squeeze, they mostly all come back down eventually. Not too many small caps can make it to day 2. They're just dilution pigs that mostly die at the end of the day, no matter what. So just don't get blown up on the ones that are squeezing. Wait till your key levels, wait till your entry triggers, and then manage your risk, and you'll be fine. All right. I don't know. That's pretty good. All right. Thanks, guys.